UPI, or the Unified Payment Interface, is one of India's outstanding success in our quest for easy, inclusive digital payments. The government offered it free and wants it to remain free. But this poses a big question for other payment systems in the present and in the future. A Reserve Bank of India discussion paper points it out excellently that to remain top-notch, payment system providers like card networks and banks have to invest in technology, and hence someone has to pay. Right now, the Reserve Bank allows a small merchant discount rate on credit and debit cards. That is, for every 100 rupees that a merchant gets paid through, say, a debit card, he gets about 99.50. And the remaining 50 pice, called the merchant discount, is shared by the banks, the bank which acquires the customer, the merchant's bank, and by the card operator. The Reserve Bank's discussion paper is asking a bunch of questions. One, should any payment system be free, be it RTGS, NEFT, credit cards, debit cards, or UPI? Two, should it be free for small merchants or small value transactions? Third, if it is to be charged, should RBI or a regulator set the price, or should it be market determined? And there are 40 other questions. To answer some of these, I have with me four stalwarts. Rajneesh Kumar, former SBI chairman and currently Bharat Pay chairman. AP Hota, former managing director of the NPCIL, that's the body which created UPI, so very important. SS Mundra, former RBI deputy governor and a veteran commercial banker for what, 40 years. And Akhil Handa, the star digital banker of the present. He's chief digital officer at Bank of Baroda. Gentlemen, thank you very much for giving me your time. Mr. Mundra, what do you think? You think if debit cards is the most ubiquitously used after UPI, so should that be made near free? Seems to be the suggestion of the paper. What's your sense?
Okay, Lata. Well, I don't think drift of the paper is... Number one, let's say RBI has started with a very clear disclaimer that none of this represents our view.
Yes.
Since there had been several developments in the payment system, it is more a kind of stock taking and review the whole infrastructure, whole structure, and invite them. So I would not like to start with a presupposition that RBI in any way is indicating any of its intention or mind. That is one thing. Second, in your opening statement, you say that in debit card, they are allowed to charge a small, MDR. Again, I would not be, to start with to quantify it as a small or big, because then we are already putting a mark to it. See, the point what is being mentioned there, that there had been a kind of no difference between debit card and credit card at some point of time when it comes to MDR. And I think there is a logical discussion and is not something new. If you look at it right from last 5 years, debit card MDR has been regulated in one way or other. So it's not something which is new being introduced. The point here is that credit card MDR carries an element of credit cost, which is not, existing in the debit card. And that is why there is a genuine reason to have a differentiation. Now, is a different point. There are two related points. Number one, even in credit card, means to me, I don't understand that why a credit being extended to a customer should be charged from the merchant at all. But as RBI has also mentioned in their own paper, that maybe globally this is the practice. Why it is so is a different subject matter of discussion. We don't go into that. So that is one point. Second, I think it would be educative to, when you say debit card is the most ubiquitously used instrument, I think it would be educative to really look at how much it is used for the cash withdrawal and how much it is really used for the
payment
online transaction. That will be, I think that will bring some quite interesting fact. And to my mind, today with so many options available, I would really advocate not very much use of debit card for the online transactions, because there is a related aspect of security is there. But again, it's a different subject matter. My viewpoint is that it would have been ideal really to have one uniform charge for any debit card transaction separated from the value. That
Yes.
would have been an ideal situation, but it will not be practical, because if you distribute the cost across all the cards, maybe the small value transaction would get charged in the same fashion as a high value. To my mind, the ideal solution would be somewhere between two, the hybrid of it, that there is a minimum uniform charge, but as the transaction value moves, it is a kind of tiered charges,
Okay.
but not necessarily linked to the value of transaction.
Fair
So I
enough.
think to begin with, I would like to just mention this.
No, that makes sense, sir. Higher the value, because after all, there is also a developmental role here in terms
Yeah.
of trying to increase the usage, especially among the financially excluded. Mr. Hota, just a slightly bigger question. RTGS and NEFT, the NPCL doesn't, I mean, RBI doesn't charge at all. And of course, in UPI also. Should we, just for, parity among all systems, should a minor charge be introduced? I mean, RBI is asking that question.
Well, payment system is public good. There is a clear strategy and vision to build a less cash society. So certain payment instruments or certain payment systems, maybe one or two digital payments and means one or two pure electronic payments and one card payment system, which is also a mass usage payment instrument, should be free to certain extent. And to certain extent, I would say capping an amount like 5,000 is a reasonable amount, because almost 90% of the transactions are fall within about 5,000 rupees.
Okay.
So that should be free. So if you ask whether debit card charges should be free, well, we should, in the interest of building a less cash society, apart from UPI, which we will discuss, or what you said we will discuss, even for the debit card, it should be free. And I suppose it was rightly done so for RuPay card, because for Visa and MasterCard, there were certain challenges in terms of certain principles.
Yeah.
And since NPCI is a not-for-profit entity owned and operated by banks themselves, closely supervised by the Reserve Bank, it could be easily implemented, and it should continue.
Yeah. So your contention, Mr. Hota, is that for under 5,000, RTGS, NEFT, debit card, UPI, everything should be free. Is that your point?
Yes, absolutely.
Okay.
Both rupee and both UPI, means all kinds of payments up to 5,000.
Okay.
All digital payments,
Fair
free
point.
up to 5,000.
Digital, not POS.
All
Not if it
digital
is,
payments.
not if it is. If I go to a shop and use the debit card, you don't mean over there. You mean only if it is online.
I want there also,
There
because
also.
that is also, that transaction is also digital. That
Fair
is a
point.
non-cash transaction.
Yeah.
Any non-cash transaction
Got
is
it.
digital transaction.
Got it. Mr. Kumar, we have you, but the line is a bit touchy. So tell me all your first reactions to how you would like payments to be charged. All instruments, debit, credit, UPI.
So what is that? There are costs associated with anything banks do, and there is a huge ecosystem which has been built for the digital payments. And in the RBI discussion paper, we have issues around how the credit card should be priced, how should the debit card transaction should be priced. Then there is a transfer through digital channels, and there are merchant transactions. So my view is that as far as UPI is concerned, even, it's a wonderful system, and the volumes are huge. There are at least 20 crore transactions are happening on UPI. And the total cost to the ecosystem is estimated to be around 6,000 crore. So even if you levy 1 rupee charge on 1 UP transaction, you would have recovered all your costs. And because there is GST, government, instead of subsidizing it, will have a revenue of 1,000 crore. Okay. So the net benefit to the government will also be 30,000 crore, and the 1 rupee charge on a transaction, it will not hurt anybody. neither the consumer, it will not be a step which would be unfriendly to the consumer. And we have to be mindful of the costs which are associated in creating the infrastructure, customer grievance redressal, your data security protocol,
Yes.
your merchant acquisition cost.
Yes.
The merchant acquisition business for any bank, it is not profitable unless there is MDR on it. And for small merchants, there could still be a case that for small merchants, say up to turnover of 20 lakh, let there not be an MDR. But I am taking a very simplistic view that if there are 20 crore UPI transaction, if you just put a very small 1 rupee fee, I think you can take care of all the problems
Okay.
around the.
Okay.
But we
Got
have
that.
to be very clear on two things. One more point I'll make.
Yes.
There is a difference between profit and profiteering, I always say. So when banks, institutions, NBCI, anyone who puts investment, there is an expectation that they will make a decent return. And if you don't make profit or earn profits, how do you invest for future?
Yeah.
Technology is changing every day.
Absolutely.
From where will the investment come?
Fair point. And there is, of course, the huge cyber risk as well. So now we have 3 points of view. Actually, Mr. Rajneesh Kumar saying that everything be charged. Mr. Hota, NPCIL's old evangelist view, nothing should be charged up to 5,000. And Mr. Mundra saying, let us grade it. Less charges for smaller amounts and slightly more for the bigger ones. Akhil, you know best where the shoe pinches, and you are the technology man. You know what the cost will be. Tell us your view first.
So, no, I think, there is merit in all what all the 3 views carry. But, there is a time for each one of these. So, for example, when you are starting off a new payment system, when you're evangelizing it, it makes all the sense to make it completely free, right? Because you want more adoption, you want to drive the acceptance, you want to market it. And hence, the biggest calling card for anything is this is a zero charge payment system. At the same time, once things start taking off, as Mr. Kumar said, there is a certain cost attached to running a payments ecosystem. From the issuing side, from the acquiring side, there are overheads. There is an operating cost, sourcing cost, marketing, fraud cost, and so you have to cover all of it. And a nominal cost, a nominal fee needs to be imposed as you mature and start scaling, because you cannot have everything for free at all given points in time.
Agree.
And hence, I think the prescription that Dr. Mundra suggested seems to be the most viable, where there is a certain segment that should indeed be charged, and they should perhaps foot the bill for a certain segment at the lower end of the spectrum that still potentially need some level of subvention. Now, I cannot imagine that after having put in about 1.7 or 1.8 crore QR codes across the country at small Kirana stores, that is roughly 30% of your small merchant coverage. Any merchant will go on and say, I'm okay paying 300, 400, 500 rupees operating cost that gets incurred on a POS terminal, right? Nobody will switch over from a free to a 500 rupee per month kind of a structure.
Okay.
And hence, to be able to subvent it, to encourage those payments, you will have to charge someone else in the ecosystem, because everything cannot be run for free at all points in time.
Fair point. Gentlemen, I have to take a very quick break. Coming back with more questions on whether RBI should set the rate or market should set it. Back in a minute.